This is where we designated the water levels for Helene.
Glenn Scarpa and his wife own Scarpa's Coastal Restaurant in Boca Grande, a small island town in Florida.
We cut everything around the whole restaurant at 2 feet, to get all the wet stuff and insulation out. 10, 12 days later, we got this one. And then we walked in here and said, oh,
December 1st marks the end of the Atlantic hurricane season, and it's been expensive and deadly. In Florida alone, 3 hurricanes made landfall in 2024, tying the highest years on record. And although the toll is still being added up, we now know the storms sweeping through the United States took more than 300 lives and cost over $190 billion across the country. That price tag makes it the 3rd costliest season in U.S. history. Scarpa, like millions of other Floridians, turns to insurance to help protect against losses from extreme weather. As the insured, he's the first step in a food chain of risk that starts with individuals or businesses, goes up to insurers, then to reinsurers, and ultimately can hit investors or even taxpayers. With each step, the risk is calculated, changed, repackaged, spread around. But one thing we know for certain, it never goes away. As risk increases in the United States and costs to insurers stack up, insurance premiums have also been on the rise.
Are we at a historical high here in the cost of insuring a home?
I'd say yes. The average cost for Florida homeowners policy is about $6,000.
Jerry Theodorou is director of the Finance, Insurance, and Trade Policy Program at R Street Institute, a D.C.-based think tank that promotes free markets.
In the insurance world, in rate making and pricing, the rate follows the risk. The risk magnitude has increased, so because the risk has increased, the losses have increased, and insurers are playing catch-up and raising prices. And there are some unique factors for Florida which differentiate it from the rest of the country.
It turns out that extreme weather is only one of those unique factors. Insurance has also gone up because of people moving to the state and building more expensive houses in risky locations.
There's more built-up value. Florida had a population of 2.2 million in 1946, and it's now 22 million. It increased 10 times. So there's a lot more built-in value in Florida that's available there to be hit by a hurricane and be destroyed. So we've got climate change, we've got the built-up environment, which has grown. There's more real estate out there to be destroyed, and you have the inflation in these prices. So it's like a trifecta.
A lot of circumstances hit at the same time.
One step up the ladder of risk, from insured to insurer, Tim Serio is CEO of Citizens Property Insurance Corporation.
You had, COVID and post-COVID, a lot of folks flocked to Florida. You had property values skyrocket, which, you could be very happy that your home was worth more, but if it costs a lot more to replace it, you're going to be paying more in insurance. You had inflation over the last several years, which drove up construction costs, cost to replace your home.
It's not just Florida that's been hit by higher insurance costs recently. Across the country, insurance prices have surged over the past 2 years. Since the beginning of 2023, the cost of homeowners insurance nationwide has climbed over 21%, while CPI rose just 5%. The price of some commercial insurance is up nearly 15% over the same period. Theodorou says the greatest problems facing insurance markets have been man-made. Companies leave states like Florida and California not because they can't price climate risk, but because they know the risk, and state laws and litigation won't always let them keep up with it.
If they're underpricing, they're not going to have a 6% profit margin, which is the going rate for insurance companies. Insurance companies are not fat, rich organizations. So that's why you have this seeming exodus from California.
This problem of insurance companies leaving the state gave rise to Serio's Citizens Property Insurance Company.
Citizens is the state-created insurer of last resort. The idea is that we exist to help the people of Florida find insurance when they really have no options. Maybe it's because of maybe they're a higher risk, not necessarily because they've done anything wrong, but the characteristics of their home.
Today, the last resort has become the only one for many who live in Florida. Citizens is the largest insurance firm in the state.
our rates were artificially suppressed, and we became probably on the whole the cheapest in the state of Florida, which caused us to grow exponentially, and that's not a good thing. There has been pretty much bipartisan agreement that a very large Citizens is not healthy overall for Florida, because if we grow too large and there's a storm or a series of storms and we can't pay our claims, the good news for our policyholders is their claims will always be paid because we have the requirement to levy a surcharge on Citizens policyholders. And if that doesn't suffice to pay claims, then it's an assessment on policyholders and non-policyholders alike to make sure claims are paid.
Individuals may be struggling to pay their premiums, and states may be struggling to keep premiums within reason. But it's not because the insurance companies are pocketing big profits. Profit margins for the S&P 500 insurance sector have climbed over the last few years, but to levels that are far from shocking, peaking around 12% this year before sliding to 7% in November. Compare that to 2024 highs of around 16% for the financial industry and over 24% for big tech. One factor constraining profit margins for insurers, beyond the claims they're paying out, has been the rising cost of insurance that they themselves have to pay. One more step up the ladder of risk.
Swiss Re is a global reinsurance company, and our clients are insurance companies. We partner with insurance companies to protect their balance sheets.
Monica Ningen is CEO of U.S. Property and Casualty Reinsurance at Swiss Re, one of the largest reinsurers in the world.
When it comes to reinsurance rates, there is an impact from climate change, but it's relatively small. The other factors being economic inflation, wage inflation, inflation of construction plays a big factor, especially in the last few years. But you also have things like urbanization and people moving into areas that are more susceptible to catastrophes.
Each of those factors helped push reinsurance rates higher every year since 2017, with an especially sharp rise in 2023. But early figures for this year suggest the trend might finally be leveling off. And even though we're closing the books on one of the worst hurricane seasons on record, signs are that this year's natural catastrophes haven't led to financial ones.
It's a chain there that spreads the risk around so that when you have a catastrophic event like Hurricane Helene, it didn't hurt the third quarter earnings. A remarkable thing. It happened at the end of September. Helene went up into North Carolina, but the insurance companies, they just reported the third quarter earnings the last few weeks, and they were pretty upbeat, didn't lose a lot because very sound, prudent use of reinsurance. And there's also private investors that want a piece of the action in the form of insurance-linked securities, also called catastrophe bonds. So there's a lot of capital. So whereas people are talking about, oh, this is going to be a $40 billion or $50 billion event, insurance companies can handle that. They're built to do that. That's what they do. So we're seeing some positive, some tailwinds that are really worth watching.
Despite all the factors driving insurance costs up, those who know the industry well see cause for hope, at least in Florida, where the government has worked to reduce lawsuits that have cost a good deal to insurance companies.
The good news is that about a year and a half ago, the governor of Florida signed into law some comprehensive tort reforms that really cut the feet out from or cut the legs off from some of these excesses of litigation. After the tort reforms went into effect last year in March, we've seen that the number of lawsuits in the first 3 quarters of the year, because we just saw the Q3 numbers, went down by 24%.
We hit 1.41 million policies in October of 2023. We're a little over 1 million now. We should end the year at around a little over 900,000 policies. That means that private carriers are coming in, they're taking policies out of Citizens, they're willing to write more risk. So, that is evidence that the market's getting healthier.
Recently, one of the publicly traded insurance companies in Florida said that we're not doing more rate increases. So it appears as if the insurance industry has caught up with the loss magnitude.
Whether or not lower insurance rates find their way to businesses and homeowners in Florida and across the country in the short term, we do know that climate risk and development in risky areas isn't going away. Monica Ningen says what happens next will come down in part to those of us at the bottom of the chain.
So when you look to the future, I think there's a few things that will change. I think that consumers were start to better understand their own risk exposure and what their own resiliency looks like. As events impact our lives every day, whether it's snow impacting, your commute to work, or it's a flood that's imposing on you returning back to your home, consumers are being more aware than they ever have been on the risks that their homes face.
Back in Boca Grande, Glenn Scarpa says he's very aware of the risk of another hurricane, but he's hoping to manage with a little bit of luck and insurance.
I mean, you got to anticipate that, it's probably going to happen again. Who knows? It could happen next year, could be 30 years, it could be 100 years, but it's going to happen again at some point.
Having a business on the island, Scarpa says, is still worth the risk. But after moving there 5 years ago and seeing the destruction to both his restaurant and his home, he's decided to sell his condo and move inland onto greener and, he hopes, drier pastures.